What up, guys? Hope everything's going well. I wanted to do a video update on Robinhood and Gamestop. It's like more and more information is coming out. I've been reading quite a bit, and I've also been watching some videos as well, trying to put two and two together because, it's really infuriating when people are told you can only trade two stocks or one stock. And that's just not fair. And I'm trying to put together, why on earth would they do that? Are they trying to protect their buddies at the hedge fund Citadel? Are they trying to protect some other the Wall Street buddies because they've been threatened because they're a small company? And then I think I figured it out what's going on, and most of you probably have too. But anyways, I was thinking, if I were the CEO of Robinhood, what would I have done this week? I would have probably raised margin requirements because you're seeing crazy volatility in few stocks, and a lot of people on my exchange are doing that. And I was just Googling that, right? I Googled margin and Robinhood. I want to see what actually happened, if my thought process was right. And yes, the CEO of Robinhood actually did raise margin requirements, and also Webull and other brokerage houses as well. And that's because Janet Yellen and the U.S. Treasury basically told the DTCC, where trades settle and whatnot, that they need to raise their margin requirements. And the DTCC said that to Robinhood and these other brokerages that, you need to put up close to 100%. And for smaller firms, that is devastating because they don't have that money on hand. And the collateral that they usually provide, it's usually short term. So you're talking about T-bills. And for my day job, I do a lot of reconciliation for collateral for T-bills and T-bonds. And this is what customers put up for trade. And sometimes the firm put up for trade. And Robinhood, I don't deal with, firms like Robinhood or anything like that, just as a disclosure. But I looked at Robinhood, and they needed to borrow $1 billion based on what's going on in the news. This is, mainstream. They had to borrow $1 billion because it looks like they couldn't meet the margin obligations, because the DTCC stated to them that in order for us to clear this trade, you need to put all this collateral down, probably in treasury bills. And that's when they started to raise margin on their customers. Other brokerage houses did this as well. For instance, like TD Ameritrade, you have to now place 100% for GameStop, AMC, and whatnot. You can still buy long puts and long calls, but you have to put all of the money down. So it's a $500 option. You need to put $500 down. If you have $600 worth of stock in GameStop, you got to put all that $600 down. So 2 shares basically. And that's basically to protect the firm and also for these brokerage houses to meet margin requirements. So if you're a small brokerage house, this could be devastating because they don't have all the money coming in at once. And in addition, a lot of people were pissed off that Robinhood, in order to, fulfill their obligations, they had to limit the amount of trading done by their customers. So I initially thought that Robinhood was trying to save their big buddies on Wall Street. While that could be a possibility, I'm more in the line of thinking that they were just trying to protect their own end because they don't have the money to meet the margin requirements at the DTCC. And right now, this is what I got on Zero Hedge, but for 36 stocks, there's a limitation of how many shares that could be purchased. I believe that's one. I find that to be insane. But if that is true, that should tell you that Robinhood is having trouble meeting, in my opinion. Okay, let me just rephrase this, just to avoid any legal consequences. It's in my opinion, Robinhood doesn't have enough money on a day-to-day basis to meet its margin requirements with the DTCC. And because of that, they are limiting the amount of shares traded on their platform. But what's going on, though, is it's pissing off their customers. Like if I were a customer and I was told, hey, I can only buy 3 shares of this stock that I really want to do or really want to invest in, and I'm told I can't, I may think about leaving the platform. I'm like, what the hell? On these other brokerage sites, they say that, okay, put 100% down. I'm like, fine, I'll put 100% down and trade it. I'll buy 10 shares and I'll put $3,000 down for Gamestop. But they're not even allowing that on Robinhood. And, it just makes me believe that they're having trouble meeting margin requirements with the DTCC. And I was just trying to think about how the CEO, Vlad, was responding to all this criticism. He said that he was trying to protect their investors. And I'm like, no, you're trying to protect your own end because you have to deal with margin requirements. Just imagine him speaking the truth, saying, hey, we at Robinhood don't have that money to fulfill the margin requirements, so we're limiting the amount of trades that you're making. What the hell would happen? There would be a run on Robinhood. And in my opinion, they're using lingo like, hey, we're trying to protect the customer, we're trying to look out in its best interest, which a lot of people don't believe. A lot of people are infuriated, or a lot of people are just pissed. So in order to prevent a run on Robinhood, they're just saying that. And if it is true that they are having problems in financing their margins, and you're seeing a slow but steady run on that app or on this trading platform, what the hell is going to happen if you continue to see this in the coming days? You can only trade 1 share. Who the hell would want to be on that platform? Like, during all this volatility, some people were like, you know what? I want to trade, and I want to trade 50 shares, 100 shares, whatever it is, of whatever particular stock, and they're told they can't do that. Yeah, that's going to be a major marketing problem for Robinhood in the coming days. They better hope that these stocks decrease significantly. That's the only way, they're probably going to or go through this, unless the Fed is bailing them out secretly. So yeah, this is a huge mess. I just don't know how millennials could continue to trade on this app. I refuse to get Robinhood because I think Jack Dorsey was promoting it last year. I'm like, no, I don't want to deal with this. I don't trust that guy, the CEO of Twitter. So yeah, what do you guys think about this? Do you think Robinhood's days are over? Do you think that, this thing will pass? Let me know what you guys think. And just the other thing though. So I've been reading stories of how people, they just want to send a message to Wall Street. I read an individual whose father, I think, took his own life after the housing bubble of 2008. And this guy said, like, you know what? I don't care if I lose my $1,000. I just want to stick it to them. So it's not about making money here. It's about, sticking it to Wall Street. And a lot of these rich guys, they don't understand that. And, I wonder how long this could continue. And the other thing is that today in the stock market, I did notice something interesting. While the market was selling off significantly, Treasury bonds still sold off. And normally, when you think the stock market's going down, you would think that bonds would rally. Bonds weren't rallying. So, that's something to look at for early next week. Even though, GameStop and some of these other stocks may continue to go higher, which creates volatility, but I wouldn't be surprised if we're close to a bottom. And if we're not close to a bottom, what do I see happening? Well, Robinhood will have more problems, and there's systemic risk behind that. I mean, that's the only way I see, the stock market not going higher after a few more days of volatility next week. But I'm still bullish the next few years, but volatility could be still ahead as we see, more craziness in this trading. Anyways, guys, thanks for watching, and I'll talk to you later.